Today is 29th of September. We have no positions opened in pre-market conditions today. These are the trades from yesterday. So we closed one more than we from previous trades, as you can see, this one. And we have two open positions from yesterday. So there were two open positions from yesterday. We are going to trade with 80 shares, as always. Show you my settings. These are the settings that I have. At the end of the settings, you can see the value that goes with it. I'm trading between 25 and 35. I much rather like to trade between 30 and 50 because they close faster, but I want to be able to measure what I'm doing. I'm using a market scanner called Top Trade Rate. That's the most traded shares, in this case North America. I'm trading against 80 shares. They have to have had 25,000 trades done since the market opened. So if I would start it immediately on market open, you wouldn't find anything unless there was a lot of pre-market share trading, but since open kind of like filters them away. You can set all these settings here in the F1 menu. Page up brings you back to where you need to go. I start my scanner using F5. I start my other scanner using F6. So now I'm trading on CAT C1 and C2, as you can see here on the top. I'm going to pause it a little bit. I'm going to wait 5 minutes and then I'm going to start the trading engine to show you my positions. I now have 40,000 in open positions. Yesterday, I think it was 50, and normally it's about 50. But because we have only so little open positions now, it's 40. I have to be careful not to make too much profit. So I kind of move my positions a little bit closer so I don't run into too much profit, because nobody understands when you make so much profit. Maybe this is interesting to have a look here at the book trader. SQ. A book trader will show you the exchanges. You can see also if you're not subscribing to a certain exchange, you will not see the prices of those exchanges. So here you see the exchanges and the amount of shares that are available. Since this is America, you have to multiply this by 100. So you can see sometimes why they jump so much, because somebody wants to buy 2,000 shares. This is going to eat up, this entire range of 28.71 to higher, unless of course somebody has hidden positions or injects the positions relatively quickly. You can see also that people kind of like round numbers. So if you want to get rid of your share, put it at 69. Because there's not much action going on, versus if you put it one higher, everybody's sitting on these whole numbers, and it's like $25 difference. Doesn't really make much difference. Only probability that you do your sale is much higher. And if you do 70, you might as well do 71, because by the time you pass this bundles, you always kind of like, I don't know why people do this. It's very predictable psychological patterns of 5 cents, as you can see. It's really interesting why it's like this. Just go just before the increments of 5, and you're good to go. Never go on the whole number, as you can see. But then again, if you look at the book trader, you can see this. All right, so we passed some time. Might as well not pause the video, just start the trader. I'm not going to trade for very long. I press F2. Start it. Let's have a look and see how they feel. This share, you can see nicely how they are jumping. That's these people buying, you know, kind of like a lot of shares all in one go. The histogram on the right side, you can see how many shares were sold at that volume, and here you can see how many shares are sold at that given time. Interesting psychology is that, you know, when you are willing to sell, somebody else must be willing to buy, or when you are willing to buy, somebody else must be willing to sell. It's kind of like you're so smart, is he so stupid, or what's the difference? Here you could see we sold this share yesterday. I'm going to put it on 7-day trade. So we sold this share twice. Probably we bought it here, but you don't see it anymore because Interactive Brokers only shows you 7 days. If you go on when you're accounting with cats, you can see everything since you're recording, which is nicer. When you look at your shares, you always get a negative view because the only shares you see are the ones you haven't sold yet because you're in a minus. The ones you have sold you don't see. If you look on the website, you will notice that we made a 120,000 euro dollars on this date on realized profit. So we've already booked home 120,000 euro, and we have opened 41,000. Probably if we stop trading for a month, all of these positions will have closed, if not before, depending a little bit how much profit you're trying to take. You can see is now starting really to trade really nice, getting a good load of trades. It's going so fast that we don't see anything anymore. So we've got 283 skipped trades, 14 we didn't get, 6 are filled. We've placed 22 orders. I think we got enough trades for today. 1, 2, 1, just 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, plenty. I'm gonna stop cats from trading. Hit escape and just cancel cats. Somebody's selling, I have no idea who, because the loudspeaker is saying auto partially filled all the time. There you go. Normally I would go around and see if I'm happy with the profit targets he was going to take, and I would alter them if I'm not happy with it. This one, for example, I don't want to. He's never going to be able to sell at that price. So I'm going to get rid of this one. I'm not trying to make a profit. If I would increase this one maybe to 70 or 77 even. But I'm not trying to make a profit. I'm just trying to buy and sell a few shares. Oh, this is a really bad idea. But then again, if you look at it on a 2 weeks basis, it likes to do these movements. You could actually make this one a lot higher. Our entry price was 26.44, and he's trying to sell it at 2 cents higher, which is ridiculous. So I'm gonna make it a bit more That's fine. That's fine. I'm commenting these trades with that's fine. That's fine for my risk appetite. I'm trying to teach cats my risk appetite. That's why you do paper trading. You can, of course, teach them with the live trading account, but I'd advise against it. Live trading feels better at about 70%, because with paper it has to actually pass the price marker, which it doesn't have to in live, because you can be the matchmaker with live trading, but you don't have that with paper. So it's nice when you know that live trading is actually better than paper trading. All right, I'm going to stop the recording for today. See you again tomorrow.